Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Monday. And we're now pushing here on April 10th, 2017, about 2:10 p.m. Central Standard Time. All right, my friends, and looking at the market, gold is down $1.50. It did settle lower than this. It settled, I think, today in the June around $12.50, $3.90. They tried to break the market down harder, but so far it just looks like a normal correction. Silver had a washout the past 2 days. It too is down, but the real breaks are coming in the platinum market and the copper market, so we'll see what goes on there. In other words, some of the industrial metals are feeling the pressure of no tax breaks yet, no stimulus packages yet, and that's scaring the markets. They are expecting more, and as I've talked about, the Trump premium's been gradually coming out of some of these markets. That's not the gold's problem. The gold market on the weekly chart has had a bullish crossover. That's number one. So now the 18-week moving average of closes is over the 100-week. In theory, that should mean the market should make a run for a new high on this leg. The old high, 1269.10. Doesn't mean I'll be right on that, but that's my theory on what it should do. We're still in a down thrust on an area chart of closes only. From 1258.80 to 1248. We got today down, by the way, to 1248.20 and came back, like I said, and closed about $5 off of that, a little more, in fact. So the key is it's got to get over this number to start an up thrust, otherwise the market's going to feel that pressure. When we take a look at a daily bar chart, this was that spike high we had on Friday. The market corrected from it and is going to end up, like I said, not too far down today. Have you done any real damage yet to the chart? Frankly, you haven't. The market's got higher lows, higher highs. So that's an important element to what's going on. The market fell down and hit the 18-day average of closes, found its support there, and has bounced up ever since. So like I said, around a 1250, 390 settlement, but as you can see, the market's higher than that as we're in the final part of the day for trading. Bollinger Bands, when you look back, stopped the rally on Friday. The high Friday was 1273.30. You did not hit the upper Bollinger Band. It was at that point 1274.20. Now that it's arcing down, it looks a little different, but you did not get up to it. You got close, and that's all that you can say. Now that number is going to fall even further, and you can see how they're narrowing in. So when you get that, it probably means that the market's waiting for an event, and you can go sideways here for a little bit, so you got to be cautious on that. Momentum-wise, the market is correcting an overbought condition that is over. In other words, the overbought part is ended. Now the market has to decide, is momentum going to push prices down as it's doing right now, or does it start flattening out? Let's assume the market decides to break down through 1245.40. This number, this 1233.70, I'm telling you, is going to lift up tonight again. So you're going to get this narrowing in because of all the sideways action on the Bollinger Bands. The gold ETF, like the futures, got the pattern of higher lows, higher highs. It has corrected most of its overbought condition. I use the word most. It's still got a reading of 70.34 on the D line. And whenever you have one of the numbers over 70, it's still overbought. Resistance back up at 119.42, and this market ran into its resistance point on Friday. The gold miners, this market's acting fairly good. Number one, it's trading at 23.70, the upper Bollinger Band, right in this area, as you can see it right there. You can see we got to it, and the market's just slightly under it. It is overbought, so we have to see what the market wants to do from here, but an uptrend. So all of the components of the gold are in uptrends, a lot of overbought areas in them except the futures. The gold silver has continued with this correction. The last I looked at it was 69.96. Now it's 70.05. I think it's going to close closer to that 69.96. If it gets over here, you destroy all this good work. So far, what you had is a market that fell apart, had a rally, fell back, couldn't take out this low. On the rally, if I'm right, it shouldn't take out this high. It's sort of narrowing itself in, getting closer and closer here to nothing. In this May silver, you're down to the 18-day average. You tried to get under it, and you're finishing right by it, as you can see. Also, you lost the embedded reading, so the market's down where it belongs. The pattern's one of a higher high and lower low, not a trend at all. The silver ETF, SLV, has got the pattern of a higher high and lower low, and it too hit the 18-day average. It's working off a conversion from having had a bullish embedded reading that did carry the market beautifully higher into now a profit-taking spell. And will the market be able to base out against that 18-day average? And you know how often I tell you that 18-day average is so important because it's where markets run to often to figure out what they want to do next. The copper market has got one of these ugly charts of lower highs, higher lows. It just keeps narrowing in within these Bollinger Bands. Momentum is saying the market's going to try to break out to the downside. We'll see if it can follow through. Last time it tried to do it was right here, and that failed miserably. So we have to wait and see. Typically, when I teach, what I do teach, not typically, but what I teach is when you get down the lower Bollinger Bands, that's where I think the smart money will try to cover shorts. You didn't get there today. You missed it today by about 45 points. In the platinum threw out a trap play. You had an outside day up on Friday. If you take out this low of Friday, which was 951.50, because the moving average of the 100-day and the 18 are right here, the next objective's the lower Bollinger Band, and that's exactly what the market went to in an oversold condition. Ugly chart. In the palladium market, you have the pattern of a higher high, a lower low. Boy, that's a pretty common theme you're hearing me say on silver, copper. It's one market after the other that are trying to play against these 18-day average, including the gold. Markets are looking for their next move. What's going to be the next direction? And remember, we do have this week Secretary of State Tillerson. He's going to be in Russia. Right now, everybody's in, I think it's Italy, but I'm not sure, with the G7 meeting where they're meeting. And they're trying to figure out what to do with a plan about Syria and other events. But it won't matter. When he goes to Russia, he's probably going to get the ice-cold shoulder after all that's taken place. In the dollar index, you're up into the resistance of the 100-day average in green, the upper Bollinger Band, and overbought. This is a prime area for some profit-taking probably in that particular market. So those are the things that I'm seeing. But let's talk about a publication that I think you should have in your library, and it's called Technical Trading Tips from the Top Pros. And in this, Modern Futures Magazine has put together a great series of articles, and here they are. And you can see, how do you optimize stops? What about the square of 9 rule? What does it mean for the NASDAQ and other markets? It's not only used there, but Gann square, very, very important if you're a Gann follower. I like oscillators, so I watch relative strength. I like to know about optimizing stops. Is there a better way to do it than you do it, or I do it, or whoever's doing it? Well, to get this, and it's a PDF, just give us a call or go to our website, sign up for it. You'll see a carousel of free offers on our website. You can click right up here if you're watching me on YouTube. A form will appear. Fill out what you want. We'll get everything to you. I'm Ira. You have a great day, and I'll talk to you all later in the end of the day financial report. Take care now.